Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on July 12th. A lot to get to this week. So the week started out kind of same as it has been, where just very narrow, of course. Most of the market's gone sideways for anywhere from 6 weeks to 4 months, depending on what you're looking at. And we actually saw more air pockets in recent days among stocks that had been kind of stalling out, couldn't get going, and then some selling pressure hit them. Retail stocks got hit pretty hard, that sort of thing. Starting Thursday, of course, with the inflation report, we've started to see what was, I guess, yesterday on Thursday, a big rotation. Today, it's just kind of broad buying power on the upside, where we've seen the broad market come alive. The number of new lows has dried up. Coming into this video, I checked, it was 2 on the New York so far this morning. Okay, so where does it all leave us? Right now, first off, I just want to say this has been going on, this sort of changing character, for a day and a half. So as a position trader, I'm not going to sit here and say that this means the next 4 months is going to look a certain way. It's too early to do that, especially as we head into earnings season. Plus, we've seen a lot of false starts in the past, not just the past few months, but many years, where things look good for a day or 2 or 3, and then some Fed speaker says something and it reverses the trend. Okay. So we'll see how it goes. Now, with that said, long-term trend is up. Intermediate term trend seems to be turning up as the broader indexes kick into gear. I already told you the new lows are dried up. To me, the real key going forward is going to be individual stocks. Like I said, so much of the market has been going sideways for weeks and months that we've seen a lot of increase in number of setups here as we head into earnings season. Now, we haven't seen many breakouts from there. In fact, like I said earlier this week, we saw some breakdowns. So to me, that's really the key. Are we going to see some fresh leadership emerge? Is it going to be a rotation or just broad buying? Is there going to be some, medical stocks and all this? We'll go through some of these names that can break out and really run in our early stage and institutions can pile into. Or is this just going to be another, basically more cross currents where there's, rotation into small caps, but out of big cap or out of tech stocks and things like that. We'll see how it plays out, but I think right now, really the next few days are going to be key. Not just earnings season, but just doing the research. And, so far a lot of the buying's been, I don't want to say off the bottom stocks, but it's either been, very, very thin stuff or off the bottom or some speculative things. Can we get some of those institutional quality breakouts? In Cabot Growth Investors Model Portfolio, it's been an unusual situation and it's an unusual stance for us. We're about 40% in cash, not because we're targeting that, but just we've been knocked out of sort of a piece of something here, a piece of something there, the rest of something over here. And because a lot of these things we've been watching, almost not everything, but most things we've been watching on our watch list, they haven't gotten going, so we haven't put money to work. If that changes, the cash position could decrease rapidly, but we'll see how it goes here in the days ahead. Okay, that's enough of a preamble. Let's get into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ. Again, I'm recording this here. It's about 11 in the morning here on Friday. So yesterday was sort of a bad day, but at this point, first of all, we're up today, but even if we weren't up today, it's one bad day. You knew something like that was going to happen. A lot of these stocks are sticking straight up in the air. And whether it's the NASDAQ or chip indexes or whatever, we're still well above this green line, which is the 25-day moving average, which we use as sort of more of a shorter term measure. Okay. Same thing with the S&P 500. It's not as extended, but still very strong, pretty much recouping all of yesterday's losses. The big action has been among the broader market. So you can see the New York Composite, and I've just mentioned this, how it's just been kind of sideways, but it's kind of setting up. And now we have 3 straight good days as I record this, 3 straight good days on the upside. IWM, which is small caps, has really taken off. Now, we'll see how it goes. Let me blow up this. This is the weekly chart. Okay, so it's a little bit, you can see it a little bit more. But so it's basically just been really this peak right here was December. It's really just been up and down, but no net progress, right? A little bit higher, a little bit lower, but no net progress for 6 months. Basically, maybe even a little bit longer. And this week does look pretty decisive. So we'll see how it goes. I'm optimistic that we finally seen the turn has come and we're going to start discounting Fed rate cuts, which is good for the broad market. You can't, you never know. Like I said, a Fed head could talk next week and throw cold water on everything, but so far so good. And here's the mid caps. Long story short is the intermediate term trend, if this holds today into next week, will probably be turning back up, especially as a lot of these things kind of clear their prior highs, okay, and kind of come out of these trading ranges. Growth, on the other hand, hasn't really it's not bad, like I said, but it's not great. This is the IBD 50 index. It's probably, I'm guessing, up here today or something. It's up a little bit, but you can just see it's been a little bit stronger than the rest of the stuff. It did hit new highs, but again, even it has been doing nothing since Memorial Day. The momentum fund still looks pretty good, but just kind of, again, one of these sort of sitting on top of the prior consolidation here. The QQQE, which is the equal weight NASDAQ 100, is starting to pop out, so that looks better. It's not a pure growth index, but looks pretty good. But when you look at, like earlier this week, this was in top 10 actually. So this is ServiceNow. I think I mentioned this on the video last week. But ServiceNow, blue chip pretty much, or emerging blue chip if you want to call it that. Software company, great sales, earnings, dependable, yada, yada. And it has been a leader coming out of here. It's not like it hadn't been leading. Let me go back to the other price scale. It had been leading, and then, topped like most software stocks in February and kind of had this tedious 22% correction before storming back to its old highs. And all of a sudden, somebody downgrades it on Monday morning, and it's like, okay, this will be a good test. And you can see what the stock has done. Now, is it toast and never heard from again? No, it could report earnings and gap up and be totally fine. But there was still like a lot of this type of action going on, okay? And that was in software. Retail stocks got hit. This was Sweetgreen, which is admittedly more of a small cap, one of the growth restaurants. Had a huge gap up here. Again, really since May, it's just been chopping around, hasn't done anything. But then it just really hits the toboggan slide. At its lows, it was down almost 40% from its highs. Okay, I'm not going to draw like a market conclusion from, like a small cap restaurant, but some of these things have been doing that. Crocs, which obviously is a little bit more well situated, but just been kind of dripping lower, fading here. Even the last couple of days, it really hasn't done much as the market's bounced. So, it's still very uneven. There's still not a lot of stuff that's, to me, quality, sales and earnings that's breaking out, but that could change here real quick, okay? Conversely, you just look at some of these things. This is XME, so materials. We'll mention a couple of these. XLI, okay, nice setup here. Kind of looks like the New York Composite, actually, just starting to get going. And then one that does intrigue me, this is which I've mentioned 1,000 times in the last 8 years without it hasn't been able to get going, but this is XBI, which is biotech. It's been out of favor for years for the most part. It's had some rally phases like here, but it looks like a nice base. So maybe we can get some rotation into like the medical biotech field, which I'd be all for. Okay. So the bottom line is there's a lot of volatility. I wouldn't say there's a lot of like progress besides 2 days ago or something, but there hasn't been a lot of progress in a lot of these things. So it's not the best environment, meaning a lot of movement, not a lot of progress unless you're kind of a day trader or swing trader. But I do think that, listen, the odds of a character change given the divergence and the rubber band getting stretched was elevated. We talked about that a few weeks ago, and we might be starting to see that now. Okay, the question is, does this turn into kind of a nasty rotation and money sloshes back and forth? Or like today, are we seeing sort of a broadening out of the buying pressure and more leadership emerge? Okay, I wish I could tell you exactly what's going to happen, but it's really just going to be detailed here in the days ahead. Okay, now into stock. So we're actually going to start here. I just was writing down a bunch of different names, but precious metals have come back to life. I'm not a gold bug or a silver bug, but a lot of these things, this is Pan American Silver, PAAS, had its nice, it didn't bottom from its bear market until I think February of this year. So it's been trending down for a while. Obviously came to life here for 2 or 3 months. And then this latest correction here not only was reasonable, but pretty tight in here, found support, near the 50-day line, give or take. And now it's come to life. Of course, most of them look similar, but Agnico Eagle, same sort of thing. It had this nice persistent advance. Here's your, multi-week correction, but nothing too damaging given the prior advance. And now it's coming to life to new highs. Chasing these things at new highs, historically, not the best idea, but we'll see how it goes. Certainly, they've been out of favor for a while. Random bull market stocks. So we've mentioned like Hood. So let me mention Hood real quick. This is an example of this is still on my watch list. We've had it in top 10. And I don't want to get too in the weeds, but you've had 3 weeks closing tight here, and then you had another 2 weeks closing tight after that. I might have mentioned that last week. But, it's just sort of like, okay, hey, I'm ready. Like, are we going to break out? Are we going to show some strength in there? Not that you have to buy everything at new highs, but can it start to resume or show some signs? And so far it's just sitting there, which is fine. But, we're kind of waiting for that. Meanwhile, some other things, like this is Evercore EVR. I mean, very, very strong, kind of an M&A bull market sort of play, advisory services. Jefferies was in top 10 recently. This broke out on earnings in late June. Obviously, it's had a nice run. So bull market stocks are looking pretty good. Home builders, not too surprisingly, but they have come back. This is ITB, hit the 200-day line and now gapping up. Now, are these things to me free and clear? No. A lot of these names, there's just kind of some overhead resistance here. And all of a sudden a little, one or two sort of down days and you're kind of still sort of in the lower end of the range. But we have seen some of these things come to life. KB Home looks like one of the best names where it's been very tedious. You can just see these very deep or long corrections. This one better than most, but now it's come to life here to new highs. Okay. China, we'll see. I'm just flagging Pinduoduo. It doesn't look great here, but this is the type of thing that I'm looking at is this is a big liquid stock, a lot of sponsorship, great numbers actually, just huge accelerating numbers. I mean, if this was an American firm, everyone would be all over it, But either way, so it looks pretty good. It kind of came to new highs here, and it's been kind of building this new structure. Is this thing going to start to show some, big volume buying down here, and the stock really rounds out a consolidation? That's the type of action I'm going to be looking for in the days ahead. So far, it's okay, but nothing noteworthy, okay? In terms of the tech stuff, actually, let me just do medical first. I mentioned biotech. So this is Neurocrine, NBIX. Again, just a very long, tight, kind of wear you out consolidation. Like it hasn't corrected that much. And if you didn't pay attention to the stock, you'd be like, oh, it's fine, But just, it's just been tried to get going here, right? It just can't get going. Now, maybe we're seeing a character change. Not a lot of volume on the buy side yet. Obviously, it's got earnings coming. It says August 1st, so coming up pretty quick. But NBIX is one to watch. ALNY, ALNY, losing money, but it's a real company. I mean, they have huge sales and stuff like that. Big, of course, trial-driven news here. Huge gap up, and the stock has been acting well. You can see it's been kind of dead in the water here for a while, but very tight down here. Chrysalis, this is Crystal Biotech, KRYS, just kind of a small cap, mid cap name, I guess. But again, we're seeing some of these things start to let loose on the upside. I'd love to see some more buying volume in some of these, but so far so good, okay? In terms of the tech stuff, I don't want to make it sound like it's bad. CRDO Tech, CRDO, at this point, they look fine. I mean, if you didn't know anything about rotation, which sometimes it's better off not to know anything about it, you have a nice breakout here on earnings, a nice powerful move, and so far it looks like 3 weeks tight, which is usually a pretty good constructive sign anyway. No volume down here. The stock is holding up quite well, okay? Teradyne, I've mentioned that before, where it had this nice breakout on this huge endless bottoming base, and it really, sometimes, I got to come up with a name for it, not to go on a tangent, but you'll often see things break out, and it's not like they necessarily have a pull back to a certain level or something like that. They just kind of crawl higher. They have trouble. My word is they have trouble pulling back, and then they kind of accelerate higher. So Teradyne's starting to accelerate higher. It got hit yesterday, but obviously it's kind of snapping back today. Looks pretty good. ASML still in that field. Again, volatile here on a day-to-day basis, but looks like it's trying to emerge from this consolidation. And then Corning, which was in top 10 a couple weeks ago. So we're still seeing like this pre-announced earnings. It might have been Monday, I guess. Yeah, I think it was Monday, and the stock immediately gapped up. And it's obviously acting great here. A little bit of an AI angle. So there's still plenty of tech stuff that looks fine, and even some stuff that's kind of emerging as well, okay? Last but not least, I just want to mention, because I do, but Uber is one of these names where, this is Uber, it declared itself as a leader. It had a nice run. It's institutional quality. It's sales, earnings, cash flow. So it's got all that. It's had this correction that's not crazy. It was, let's see here, 23% correction after that run, not the worst, hit the 40-week line. There's been nervousness about their outlook, about robo-taxi or whatever, but it's trying to round out. It's had a few weeks up in a row. Last week was super low volume down here. And then yesterday it kind of popped on some of this. I guess they're going to delay the robo-taxi thing from Tesla. Either way, this is sort of a name where they do have earnings coming up, and that will probably tell the tale. But this is sort of an example of a name that's not sticking straight up in the air. It's rounding out. It's been a leader. It's got the numbers. Can it kind of round out its consolidation going forward? Back to the market. All I can say is, it's been unusual times, but now it's really interesting times. I think the broad market has probably bottomed for now. I mean, I think that's a pretty safe bet, unless something dramatic changes. The question is, does that lead to like a rotation where there's more cross currents? Is it like today where it's broad buying pressure? How do things play out? And more important to me is, do we see some individual stocks confirm on the upside? Some of these names here too, but there's plenty of names out there that have, like, this is the RSP, this is the equal weight S&P 500. This is big caps. There's a lot of stocks out there that have been doing this, since March. Even if you look at, like we looked at the IBD 50 index, again, it hit new highs back here, but for the most part, it's basically just been kind of consolidating in this sort of, call it a base on base, since early March. So if things can get going, I do think there'll be stuff to sink our teeth into. But it's so fresh. It's been a day and a half so far. Let's see how things go as we enter next week and whether we start to see some legit breakouts on the upside. Okay, that's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.